QuickBooks Pro Desktop 2021. Reversing entry, accrued interest. Let's get into it with Intuit. QuickBooks Pro Desktop 2021. Here we are in our Get Great Guitar homepage. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. We're going to be continuing on with our reversing entry related to accrued interest. To do so, let's open up our financial statements. Go into the reports up top, company and financial, going on down to the balance sheet. We're going to be changing the dates from the customized section to 01/01/21 to 02/28/21, and then run that report. And then let's think about this from the profit and loss, or open the profit and loss. Reports drop down, company and financial, profit and loss, P&L, changing the dates from 01/01/21 to 02/28/21. So last time you'll recall that we entered an adjusting entry related to the interest. I'm going to open up our loan here. We had an adjusting entry to accrue part of the interest that had been accrued, this $56.25 that we have not yet paid. And we had to enter a transaction in order to record that, and the adjusting entry process, which in Excel looks like this. You should have access to these worksheets, but if you don't, that's okay. You can just follow along here as well. We'll enter this into QuickBooks. So we had this adjusting entry, which in the worksheet format said, okay, that means that interest payable went up because we owe interest, and we had interest expense. That's where we were basically left off last time. So we had an adjusting entry that increased the expense down here, interest expense, and the payable, which is on the balance sheet side of things, going to the balance sheet, we had the payable account being increased. And then we said, and we discussed this in the Excel worksheet, so I won't go into it in as much detail, and we'll just do the transaction. We said, hey, it works logistically for us to reverse out that adjusting entry to make a cutoff between what the data input will be for the business on a accounting standpoint, as opposed to the adjusting process. We're going to break up the adjusting process and the data input, and it might be easier for us to then reverse this transaction. The reversing entries will always take place the day after the cutoff date. So we're going to enter this in as of March 1st, the day after the cutoff date where we made the financial statements, which is February 28th. And the reversing entry then would just simply take out the interest payable. So we're just doing the exact reversal here. And then the other side would be having a credit to the interest expense. Looks funny down here, but this amount is wrong really for 15 days until we actually make the payment, and then it'll net out and be correct. And that's in alignment with our system of being correct in terms of an accrual basis periodically at the month end or year end, month end in this case, so that we can make the financial statements and then make things as logistically easy as possible. All right, so now we're going to enter this into QuickBooks. So we're just going to go back over here. Normally you would do this with an adjusting entry. We're going to use the registers here. So usually you would use a journal entry. We're going to use the register as much as we can. So we're going to go to the lists drop down, chart of accounts, and the two accounts are affected. One's going to be a balance sheet account. We have to use that one, not interest expense, because there will be a ledger for basically most of the balance sheet accounts that we can do this with. So we're going to then go to the liability for this interest payable we set up last time, double clicking on that. We then see our register, and I'm simply going to reverse what we did last time. Just make sure we get the date right as of 03/01/21, the day after the cutoff. And then we're going to say, instead of an increase, this is going to be a decrease. We're just going to reverse it exactly here, right? 56.25. And the other side is going to be going to, once again, the interest expense. So interest expense. So same idea up top, but now it's going to interest expense. Now we're just reversing it. And then I'm going to say this is a reversing entry. So I want to be able to label that so we can see it. I like to hit the splits down here so we can do that on both sides of the transaction, both accounts showing reversing entry. And okay, and so I'm going to say record. Let's record that. This goes back down to, and I put a 3 instead of a 6. So let me change that. I'm going to go back in here, change that to a 6. So then when I record it, it should go down to 0. I'm going to say yes. There it goes back down to 0. If I double click on the journal entry right there, we're going to see our journal entry, which is going to look more like what we did in Excel in terms of the debits and credits. So here's the debit and credit. It's in the reverse order, like which account's on top and bottom. that doesn't really matter as long as you have the debits and credits properly input, although some people can get kind of picky on it when that when it's out of order, but it doesn't really matter. So in any case, we're going to close this back out, close this back out, close this back out. Let's see what happened then. Notice this is as of the cutoff date. Now this is why we have to kind of go back and forth. Like if I look at this in our Excel worksheet, which is very, long, I know a lot of numbers in it, but notice what we can see is this is where we are as of the cutoff date. And this is, which includes this adjusting entry. And then we reversed it out. And as of the day after, as of March 1st, that amount's going to be back down to zero on the trial balance. And that's the case whether we do it for the period end March, for the 3-month time period, or just for 1 month. In other words, notice the balance sheet is as of a point in time. So if I change this to 1 day forward, that amount, once I refresh, is going to go down to zero. It's gone away now because we removed it. That's going to be the same if we think about it as a range of January through March, because really this report is only as of a point in time, so it doesn't change. Or if we think of this just as March 1st itself, and that's it, because it's a point in time report rather than a range. If I go to the profit and loss report, then I can say, okay, this is as of the 2-month time period that we're going to be looking at for our process here. To make things correct as of this 2-month time period, we have the interest expense, which is included. If I double click on that interest expense, there's the $56.25, closing this back out. Now, if I change, well, first let's take a look at the total. We're at $10,305.84. And if I go back to the Excel worksheet, that's where we stand as of the cutoff date, that $10,305.84. And then if I look at it for the 3-month time period, including March, so if I go, okay, now I'm gonna run the report through the 1st of March and say, okay, now we're going to go back down here. We're at the $10,362.09, which matches our worksheet here, $10,362.09. And if I go back here, if I double click on the interest expense, see the activity in it, double clicking there, doesn't want to go in. We have our adjusting entry as of 2/28 and the reversing entry as of 3/1. Has now taken it back out and removed that, closing this back out. And then if I saw this and I changed the beginning date just to look at March, closing out the prior period, the 2-month time period, and I say, okay, let's see this as of 03/01/21, just for the current data in March, all I have is that interest expense. All I have is that negative interest expense, as we can see over here on the Excel worksheet, meaning this whole thing closed out to equity. And the only thing that has been entered in the current month, the current time period, is that 56. Now it's a negative number. So that's funny, because you shouldn't have a negative number in the current month. There's no such thing as a negative expense typically. That doesn't make sense. But what's going to happen here is that's correct. That's going to be incorrect until the accounting department makes their adjusting transaction, meaning they're going to enter this check according to this amortization table, entering this journal entry. They will do so on 3/15. So as of 3/15, they will be debiting the interest expense by the full amount, the $112.50. And what should be in the current period is the $112.50 minus the $56.25. So as of that point in time, it'll net out against this negative number and it'll be correct. And that means the bookkeeper doesn't need to do anything funny. They can just do their normal transaction. They don't have to do anything that takes into consideration our adjusting entry in order to just move forward with what they would normally do with the data input. And the way they would do that data input, just as we saw with the prior checks that were written, they can write a check for the interest, and they would be saying, okay, loan payment's going to be going down. I won't actually record this, but they would say the loan payment's going to be going down here. This would be this journal entry by the cash. I mean, the cash is going to be going down by the $1,742, and then they would record the interest expense, which would be here, the $112.50 to the interest expense, and then the loan payable would be recorded here at the $1,629.72 in accordance with the amortization table as we saw in the prior period. And they just follow the amortization table. They don't need to do anything with our accrual. And so that's going to be the idea of these reversing type of entries. So this is where we stand at this point in time. If you're following along, here's going to be the balance sheet. These are our numbers thus far on the balance sheet. I'm then going to open up the trial balance because I think that's the easiest thing to look at. So I'm going to go to the reports and scroll down, and I'm going to be looking at the trial balance. And so let's make this as of 01/01/21 to 02/28/21. And so here's where we stand as of our cutoff date. And then if I look at this 1 day after 03/01, here's where we stand after we did that basically reversing entry.